Good morning, guys. This is Vic from Grasping the Market, and welcome to our morning briefing. It is Tuesday, April 30th, 6:12 a.m. So let's get cracking. Um, for for a fifth week in a row, we continue trending higher, and now we came within 10 handles from the all-time high here at 29.6125. I think at the moment being careful is a very important thing because being such small proximity of a major reference like the all-time high increases the risk dramatically. And also we have a couple of major economic releases this week in the form of FOMC and the non-farm payrolls on Friday. So it is not uncommon for the liquidity to drop ahead of these releases, making it more risky out there. So on the daily, we continue seeing a recent pattern of consolidation, push, consolidation, push. But this suggests that the trend up lacks a strong drive. It's not one of those trends that pushes. It's requiring a lot of pausing before continuing. So we need to be careful there. Zooming into the market profile, the market validated Friday's afternoon spike by establishing higher value, and this after finding no selling interest below Friday's settlement. Um, two things, two relevant things that jump to the eye are that number one, judging by the weak structure, the market seems to be driven by, for the time being, by short-term money. We need to be aware of this because it is not uncommon when this happens to have strong pullbacks correcting. And number two, despite higher value that we had yesterday, we had a very weak close, perhaps influenced by some earnings released after the market close. So we need to keep an eye on that. So the immediate focus for the morning is assessing this late afternoon pullback for continuation or lack of it. Acceptance below the end pullback denotes change and increases the odds of having a failed break from last week's balancing range, which is down here. The overnight activity suggests the possibility of probing lower, given that we have a very prominent POC. But remember, anything can happen as odds are just odds. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.